headphones ain't on. Here's your pre-market movers. I gotta pull up. Let me turn down the volume on my phone. I like reading your comments on my phone instead of on the screen. I have them on the screen. Hit the thumbs up button if you're listening to this later. Live chat. There we go. And I'm going to bring up TrendSpider. We've got a good indication. Ooh, and I'm seeing, just Apple. Your boy is big in Apple. I love my Apple. Hold on, I got to bring up the podcast recording. And Boyle, I need to put in my notes too. Boyle's an opportunity. Shouldn't have held on to it over the weekend. Where are my notes? There they are. Man. Okay. And I've got my Active Trader Pro up. I've got Tesla up there. It is up in pre-market. What's the podcast name? I gotta look up the podcast name. Your library, it was on the tape with Guy Adami and Dan Nathanson on Tesla markets, etc. Great podcast on the tape. Larry. Morning, Larry. I'm going to do some scans. What am I looking at here? Okay. I got to make sure I'm going to take a screenshot of my hair. It's blonde today, but it's golden. It's going to be white. I didn't dye it last night. I got to dye it. Got to dye it tonight. I'm going to scan daily market stock picks market scanner. We're going to do brokerage holdings. There we go. Holy crap. So many cross ups. Apple crossed up. XLY crossed up. Amazon crossed up. Microsoft crossed up. MPLX crossed up. Morgan Stanley crossed up. Ooh, I don't hold Etsy. I do. I actually hold Etsy. I like Etsy's chart. Etsy. I am not going to go over all of these. But Pfizer went up, but I didn't. I'm going to pull up Pfizer. I'm going to bring it up. I'll bring up Pfizer. I'm not a fan of Pfizer, but yeah, let's look at the core investments group. It's what my portfolio should look like, but it doesn't, just because I'm dumb. I got to restart DRN. The futures have taken a pretty good turn positive. Crazy good. I'm waiting for TrendSpider to scan the core portfolio, but Apple is up almost 2%. Meta is up almost 2%. Meta could be going up with the TikTok bill in Congress Friday, I think. Okay, MPLX, XLY, Amazon, Bank of America. I may just not even go over the energy sector today. VOO a cross up, finally. Whew. Nvidia with a cross up, Uber with a cross up, Disney with a cross up, mRNA. If I'm bringing up Pfizer, I got to bring up mRNA. Wow. Oof. That's a lot of cross ups. Energy names that we own. Let's see. I guess PXD didn't get a cross up, but that's had a while. A wild one. If you're looking to play in pre-market. Boyle, by the way, has crashed. It is down almost at $6. It closed at $7.86. The price of natural gas has just collapsed. Let me see if there's anything on Boyle. Any news? Investors plow into zero-fee natural gas and inverse ARC ETFs. Fastest growing ETFs of 2023. Oh, it's a good list. You know what? I should probably tweet that out. That's an interesting one. Nothing Energy. Wow. Nothing Energy. Levered ETFs. We've got UPRO, SPXL, TQQQ, DRN, TARK. Boom. Morning, Sherry. Natural gas. I do think that $6 is probably the pivot point listen, Boyle could go to $2. That I've trended that one enough for folks that it could go to $2. My particular thoughts on it is that we are looking at just natural gas continuing to go downward. It had a nice pop. VIG. But VOO. Oh, we have that one. I'm gonna put all these in the description, but I am not gonna go through all of them. I've got too many scans. Wow. XLRE, XLV, XLF, XLK, XLY, XLU. You've got such a bullish market right now that Powell has nothing. All he's got to do is say, yeah, this worries us. FedEx, it's not a great chart. Marriott, too far over the 200. Home Depot under 300. I like Home Depot under 300. Yeah, and James, I've got in my notes. Powell. There was a great podcast, by the way, about I think it's On the Tape, is what it's called, and it's Guy Adami and Dan Nathanson, who are on CNBC, who I like, who are fairly bearish, and AI has a cross up. Do we like that chart? Nope. ARKW, we have a cross up. But they were talking about Powell's got to do something on Wednesday. JPY has a cross up. I'm going to bring up JPY. Atlassian, no. This is Realty Income. This is a huge dividend payer. Let me see. What's their dividend? Oh, it's a REIT. 4.74. You're right in the middle of your 52-week. It's a nice one, but let's see. ARKK. Deere has another cross up. It's just using that 200 day. We can bring this one up. I'll put it in. Upstart. Yeah, I think we brought up Cord enough. It's kind of like, I bought PXD. Let's see, CHRD. Let me just bring it up real quick. Yeah, it's getting up over that. Up over the 200 day. I mean, I still think that 150 just seems to be kind of the top. Let's see. Oh, I didn't want that. CHRD. 3.9. Forward PE is 5.49. The forward PE is higher than the PE. Dividend 3.56. You get the $5 dividend. Hold on. What's 140 divided by 5? Hold on. What's $5 divided by 140?
That would be approximately 4 cents.
Oh. What's 5 divided by 4/3? What's 5 divided by 140? I'm horrible at this.
It's approximately 0.03571.
So it's a nice 3% right there for a instant 3%. Hey, let's make 3% on our money in one day. Probably not a bad thing to bring up. You know what, James? You're right. CHRD, 3% dividend. If you own it today, it's not bad. But I will tell you, here, and I'll go over here. This is what's crazy. A 1-year treasury bond. Remember, we looked at this last week. It was 5.09, I should say, 5.09. It's at 5.18 right now. That is a U.S. Treasury bond that you can buy on 1 year. Let me see. It takes me into the sign in. I don't want to sign in. But let's see. QDEL, I don't want to bring up. Royal Caribbean, they're still way above their 200 day. Shift Technology. Best Buy. Any reaction is an overreaction. I don't like that. Sandile. SNDL. Ooh. CCL Carnival above their 200-day MPLX. We talked about PFF. I'm going to bring up PFF because you know what? That's a great, just hold it, man. You got $1 million, 5% of $1 million's what, 50 grand? Nice 50 grand right there, but you can buy a bond and get 50 grand tax-free too. So, I mean, that's the dilemma here today is, Where there was no alternative, you've got so many alternatives today. And with just a backstop of, you can get 5%, just flat out 5% with no risk. Although, I think the bond market at 5%, I think part of the inversion is thinking that the U.S. defaults and doesn't raise the debt limit in June. So if you think that they're going to bring it up to I think it might get close to 6% at that point. Because again, if they default and they can't pay their debts, the U.S. is screwed. $6.09. Boyle it's not getting confirmation. Nope, still under the 9-day. And JR, I have Meta in my notes. Meta's huge, and a part of the reason it's going up is there is a pretty concerted effort to ban it here in this country. I found it, I was listening, again, your boy was doing 10 to 12 miles this weekend today. My back is killing me right now, but I heard a great justification for pouring more money into the CHIPS Act and just doubling down. MASS, Toast, got to cross up. This is an interesting one because it's so far down. Hood, you ain't coming out. There ain't no way I'm telling people to put money into Hood. But the CHIPS Act, so here we spend billions of dollars protecting Taiwan. And the main reason is because we want chips. And that, make no mistake about it, that's just chips. If we were to take those trillions of dollars that we spend on that and just onshore chip manufacturing to protect it, yeah. I don't like any of those. Okay, let's go to the Dow. Let's see what the Dow's got cooking. By the way, hit the thumbs up button and subscribe. If you're not subscribed, just subscribe. You tune in. Why not subscribe? Hit the notification button. I'm on every morning between 8:30 and 9:30. I got a little bit of a late start. I swore this weekend was spring forward. So I laid in bed thinking it was, I could kind of rest and daylight and blah, 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 but it wasn't. Costco's on its way up. Disney, up over 100 again. I think you could buy Disney. And it did have a cross-up. I think it's in the cross-up. Yeah, it's in the cross-up. Yeah, ONCS. I think, James, you and I texted about that on Friday, I think. It's a hype play. Momentum. Take the momentum and trade it. That is one that I would not buy and then go to work. Let's just say that. I would absolutely 100%. Home Depot we have. J&J. Oh, that's such a great entrance. On J&J, I think. IBM. These are ones that I did. American Express, AXP. I hate this gap down here, but God, that's just looking like it's gonna go higher. I'll bring it up. Apple we have, Disney we have, Microsoft. Did I bring up Microsoft? I did. Microsoft's just God. Let's go to the NASDAQ 100, of which we will have a ton. And by the way, I did change my. Wow, this came up quick. Pfizer. Nothing that I want. Walgreens Boots. Oof, do I want to get into the healthcare one? That's an interesting one under the 200 day. because you could run 10% would be 39. That would be a tough ask, because that volume shelf, nobody's holding up here. Absolutely nobody's holding up here. Costco's under 500, and I'll take a look at that one, Brandon, and welcome Brittany, bitch. By the way, if somebody's just new and they're tuning in, Brittany bitch is a loving term. I watched Chris Rock on this weekend. Do not get triggered. You know what we'll do? We'll do this. We'll do this for you. We'll do this. Clapping so you don't get triggered. Southern Company. That's a good one. That's a great chart. But it's a falling knife, but it's a great chart. Qualcomm, we talked about it. Philip Morris, I will not get anybody into. That's just a Starbucks. This is for China reopening. Morgan Stanley, we talked about. I like it under 100. Microsoft, NEE, which is Next Era Energy. I like that one. I'm going to bring that one up because I think somebody asked me to go over that one. Pfizer, Lilly at 318. Has it dipped enough? They just had weak guidance. I mean, here, you look at the long term on this one. Let's go to a weekly. Still hasn't dipped enough. I mean, the only time it really got under the 50-day was here October 2020, and it's under the 50-day now. I just don't know. I can't. General Dynamics. That's an interesting one. Covered the gap. Kind of floundering. I'll put it in there. GM. Did I have GM? I'm going to put GM in here. Why not? Duke Energy. We talked about Duke Energy. Oracle, which has earnings this week, by the way, ironically. ACN. It's under the 200-day. This is Bank of New York. It's just too high. Comcast got a big upgrade today with Netflix. Home Depot and Amazon. Let's go to, should I do the energy sector? See, here's the, energy is one that I think is getting ready to go, but I just don't see anything in the energy sector that I really love. I mean, MPLX is just, I mean, you buy that for the dividend and yeah, Brandon, no, they're not increasing the membership and they're getting killed by inflation. So, okay, let me do this. ONCS. I'm going to abide by James because ONCS is one that has run. Oh, stop. And by the way, we may hear a dog bark here in the background. So, ONCS, complete hype. Absolutely 100% hype play. The volume has supported it. You can see the volume spike right there. If we just go to a 5-day and look at this one, complete hype. I mean, you started down here at about $1. It took off. It went all the way to about $3.10 in that area. And it's just completely gone down. Now, if we go over to our Safari view, we go to our strategy tester, we look at the 4-hour, and we do ONCS. Look, I mean, you're still in at $1.20 in the 4-hour. You know what? This is probably better run on our 65-minute algorithm, which is a day trading algorithm. It basically, once you get over the 8-day, it buys in. And see, James, I would be skeptical of getting in right now because this algorithm has you out. Yeah. I would be skeptical of that downturn. Because again, on March 1st, this one has that huge gap up. I mean, it's hype. Let's just make sure. ONCS, I think they got some type of approval or something like that. March 8th, 2021. I mean, this is 2020. They haven't been covered since 2021. There's no news whatsoever. Nothing. Insider sale at 137. I mean, he sold 50 shares. I mean, no, 1,000 shares. Value was $55. There's not even insiders that are selling or buying. It's hype. Absolute hype. So be careful. And here we'll look at Costco. This is Costco. And then I'm going to get started on the podcast. Costco's a good chart. This is the 65-minute algorithm, which has a buy-in at 475 here, which it's trading at right now. That's market's about to open, but 475 is where it would go. We'll run the 4-hour algorithm, which is because we all have lives. 4-hour algorithm has you not quite back in. See, the MACD is still on a downward trend. You're going to open up with a green candle, and you've got this gap. This gap still scares me down here. But for long term, oh, look at that. They're making a speech at Princeton on Saturday in front of Nassau Hall. For you guys that don't know, I grew up in Princeton. My mother was the first mother of children to go to Princeton University. So, and yeah, we made it hell. By the way, if you are here, there's a bunch of people listening. Hit the thumbs up button. Make sure you subscribe. I could use the subscribe. It doesn't hurt you. I will give you some really good picks today. I have a list that is just too long to go over. But TCOM, let me see. Trip.com. This is the chart that I wanted to look at. Ooh, that's just... It's extended. They have earnings today, and this is one that I thought maybe we could play into earnings. I'm bringing it up just as, hey, if you want to gamble. But the 52-week high is $40.17. It's not making money. If for some reason, yeah, but James, super low RSI doesn't mean it's got to bounce up. Super low RSI can just stay there if the company's worth no money. Ooh. God, see, I'm going to bring this one up as a way to look at how I look at this, stock and earnings and stuff like that. Indices, check your indices. I will tell you what I am up right now. Market just opened. So for the day, the Dow is up 0.05. The NASDAQ is up 0.5. The S&P is up 0.2. So let's put in our Face ID. So if you're up more than, say, 0.3, you're doing good. Your boy here is up 1.12%. I am doubling the indices. It's Apple. I mean, don't think that I'm some kind of genius. It's Apple. And for those of you that may be new here, Apple makes up a huge majority of my, I think it's between 30 and 40% of my entire portfolio, which is not, and I repeat, not suggested. I've grown into that. By the way, Cleveland Cliffs is down 1.67% to 2241. This is bucking the trend. Commodities have taken a little leg lower, but that's because we got in here at about 2068. I think I got in at 2090. and you're seeing a little bit of a rollover. I would expect it to continue. It's still above the 9-day. I'm not selling. So I am holding on to this one. Another trade that I've done this year that is a new position for me is Wells Fargo, WFC. I don't have that in our core portfolio, but I figured I would look at these just because I'm still holding these. So I got in down here at about $40.50, I believe. The algorithm got you out right here with a, what's that? How much is that? 11.5% gain. I am still holding. It will get a new trigger on today, so it should take a leg up again. I am seeing, just in looking at this chart, kind of higher highs. So if I take just a look and we go here and we touch 3 points, I'm kind of seeing if we'll touch 3 points. That's kind of, so as long as I'm above $40.50, I think your bottom is 42. Your top is 50. At 50, I may think about, getting out of this one. But it's a recovery play. It is a good play. Let me see. What else did I buy this year? Let's see. AMD, I've held. CRM, I added to it. Devon, I've added to it. Etsy, Google, I've added to it. At 100, not at 94, at 100, but you've got a good realm there. Coke is still under 60. I think you're crazy if you're not buying it under 60. PXD, brand new one. It is down 1% today. I bought this one at 208, but I got the dividend, a nice 3% dividend on that one. I'm still holding it. I'm still going to hold it. I think this one, the 200 days turning down, the 50 days turning down, but I'm a believer in energy and I'll just hold it. It's 9% dividend, somewhere around there. Target, I have added in the 140s, I think. My average purchase price on Target is 111. So Target is one that I would absolutely tell folks that you could get into Target. Let's see, 168. You're trading at 165. It got you right out. So you're out, but it's probably going to get you back in. And that's it. I haven't added to my Exxon. Exxon's just bumping up against 52-week highs of like 118. Just can't get back up there. Apple is up 2.36%. Let's see. We don't have any insider buys. I don't know what's going on with Apple. Let's see. Did something happen with Apple? March 6th, Goldman. Goldman initiated coverage with a $199 price target. So your Apple got a 2% just bump. I think that's probably going to be the only thing. Let's see if this isn't behind a paywall. Maybe we can read what happened with Apple. But it probably is behind a paywall, knowing Barron's. Apple gained 1.8%. Goldman analyst initiated coverage. Yep, behind a paywall. So we're going to get out of that one. Okay, let me start the podcast. So essentially what happened with PXD, and I went over this, and not that you guys need to follow me at all, but my strategy was, hey, with an 11%, something, say a 12% dividend, it's 3%. Okay, that is a 3% quarterly dividend. So I am going to make, my thought was, okay, we just had this cross up at 203. you're going to get paid 3% if you hold it on March 3rd. So on March 2nd, I was looking for a good price point. I chased it to, I think, 208. 208. And, GNS. Yeah, GNS I saw was running. But I chased it to 208. But now, at 208, I'm at 207.47, which is where it's trading at now. It's down 1%. That 3% dividend has been taken out of the stock. You're kind of going to flounder here, I think. Again, my worry is that the 50 days moving down, the 200 days moving down, the 9 days moving up, and the 21-day just kind of looks like it moved a little bit. But that RSI hit 50 kind of quickly from this 203 price point on March 1st. So GNS, we don't do GNS on our algorithm. We do GNS on Active Trader Pro. And I saw that. I think there was some news. I think the CEO put out some short squeeze, news or something on Friday. And you saw it. I mean, just look, it doubled on Friday. It just doubled on Friday. GNS it went crazy. Yes, absolutely. All you have to do, so the way an ex-dividend date works, Christian, is, and PXD is a good example. So for this one, the ex-dividend date was March 3rd. So at the closing of March 2nd, I needed to hold that stock. On the opening of March 3rd, I can sell that stock because what happens is that dividend, say it's 3%, that dividend on the open. So this one closed on March 2nd at 209.81. The open on March 3rd was 201.27. Essentially, when it opened up for pre-market, for whatever, that 3% dividend was taken out. So I am now the record holder of getting paid that dividend, even if I wind up selling the stock. So good question. So that's why, and that's why CHRD, James brings up a good point. I mean, I'm going to bring it up in the podcast when I record it. Today's, if you hold it, let me make sure. I think CHRD. Let's just make sure. I think this is going to tell me. Yeah, the quarterly reports represents an earnings surprise of minus 10%. A quarter ago, it was expected that the company would post $8.06 per share, blah, blah, blah. I guess this one doesn't have it. Zacks. There, I think this is the article that I was reading that had it in there. Shareholder return declared a base plus dividend of $4.80 per common share. The dividend will be payable on March 21st to shareholders as of record of March 7th. So you have it basically you have to hold it before the close of today for CHRD, and you'll get paid $4.80 per share. So, yes and no, Christian. Remember, a dividend is money taken out of a stock. So you get there's actually a ETF that plays this, and it performs at about just a slight increase. I'll be right back. Get some water. You two, why aren't you over here in this bed? Okay. Yeah, and people have done this before in long-term strategy. I mean, you can Google it. It kind of makes sense, but okay, market's open, so let's see where the candle of SPY is. I mean, look, you're passing the 50-day on the 4-hour. If we look at just the daily, you're above the 50-day. You had this golden cross here. You bounce off the 200-day. I mean, it's clear as day that 200-day is providing some support level at this point. Powell could kill that, but see, but all of these on my algorithm, VRO, it's going to look douchey because it's just kind of in the same territory. Today's candle is a 9.89%, but does that look good? No. This isn't a day trade. The problem is, remember, guys, and I think it was Serena who was on here on Friday, and so somebody told me it was a weird way to end the show on Friday. But this woman from India came on and she started saying my strategy has it has 100% win. And so I was talking to her and it was fun. It was good. But I told her, I said, I'm just not a day trading channel. I'm not. You guys can trade momentum all you want. And I am completely for, hey, go and, share momentum strategy because momentum trading works. You can do it. Personally, I haven't seen anybody who has made a significant gain in the market in the last 20 years that's sustainable with momentum trading. But you can do it 100%. The guys like Warrior Trading, who's charging $8,000 for his quote-unquote course and tools, he's making money off his course. Some of the grifters who are taking your money for courses and saying that they're doing all of this, yet they're making money off your course fee. So, but MSGM, I mean, if you want momentum trades, there are plenty of websites that put this out for free. You can even do a scanner. Here, if we go over to, let's do a screener. And we're going to do all. Let's look. There is a way. Earnings date, current ratio, price sales, shares outstanding, relative IPO date, change, RSI. There's a way to look at this, I think. Let's see. Yeah, a lot of these. We can just look at technicals. That's what we can do. So we have 17 tickers here. They're 50% above the 20-day moving average, 50% above their 50-day moving average. And let's move this priced 50% above the 200-day. Here you go. If you want to see movers, all of these are movers right here. So all I did, just so you guys know, there is no, here we can even move. We can move these to any. We'll move this one to any. And we'll say change. We'll say up 15%. You got 16 tickers right here. Let's say up 20%. You got 12 tickers right there. So, and I do think you need to, yeah, it's 9:45, so it's 15 minutes. Oh, awesome, James. Yeah, I know you've been using FinViz a lot. They're great. I mean, you know, if by the way, KOLD. Holy crap, hold on. Let's go over. GNS is crazy. That's up 15%. KOLD, that just came up on that scanning list, by the way. Wow. 20% gain, which means Boyle is down 20%. Is Boyle under 6? I know, that's what I saw, Joe. I saw Boyle is 620. 619 was kind of, did we get to 609? It was at 612. I think it was at 609 in pre-market. Yeah, it got down to about 605, it looks like. So you're up above the 9-day. I do think, you know, if you take a look, I have to record this podcast because I don't want to be inside all freaking day. But KOLD, I mean, the reason it's up 20%, look at the MACD. I mean, you know, you guys talk about the RSI being super low. It went down to 32 here, and you're at 44 now. This one's going to shoot up, and it's probably going to hit, my guess is today it will hit 54, maybe 52 to 54. But then it's going to lose its confirmation. It's coming down here to 32. So this run right here is too strong. And natural gas, I think it was selling at $4 per, hold on, U.S. nat gas price, $3. So 52-week high is $9.68. 52-week low is $2.73. So it's settled, I guess, at 276. It's at 309 right now. So, yeah, I don't even know how to read a lot of that stuff, but I think Boyle, even though you're down here at 6. Let's look at where it is. There's a lot of charts right here. I mean, it's green candle today. You're down here at 6. The algorithm hasn't gotten you out. Probably will, because that MACD still hasn't crossed down. I mean, it just got up to the oscillator, just to that 0 line. So, Sania, my friend Sania. I am going to do my podcast now, Sania, so please don't spam us with a bunch of things. I'd tell you narrow it down, and I hope you're starting your YouTube today. But I'm going to start my podcast now. Yes, Sania's batting 100%. Sania, good for you. Okay. Good morning. It's Monday, March 6th. It is 9:52. I've been goofing around on YouTube with a bunch of folks, just kind of chatting it up, making sure that we all know where the market's going. Boyle is down near $6. I said, hey, $6 is probably your pivot point on this one. I think I said that like 2 weeks ago, and it went down to $4. We ran up to 7, but it's 20% down today. KOLD is your play today. It's up 20%. I want to start off with SPY again. SPY had a cross up on Friday at 402.98. We're trading at 405. So like I said, I thought that sentiment had changed. My sentiment has changed, but this week is kind of critical. The big thing is Jerome Powell is testifying on Wednesday. It might get really, really crazy. Because if Powell is pushed on the job market, if Powell is pushed on Will you raise 50 basis points if need be? If he mentions anything about a 50 base point versus a 0.25 basis point move at the end of March, this market could get absolutely killed. But on SPY, this is a 4-hour look at it. But again, my algorithm works on 4 hours. If we take a look at the daily, which most algorithms from Wall Street will kind of guide their traders on, you can clearly see that the 200-day, which is 393, we use that as support with this bounce. So you're getting a bounce and then an up, a bounce and then an up, and then you get a bounce and then an up for the month of January. February, you get a bounce down and then you get an up. Now, if we go back to last year at this time, I want to bring up last year because we saw this last year as well. We saw the big move down in January, but then at the end of January into February, we saw an uptick, and then we saw a down. And in March, we saw an enormous upward trend above the 200-day. And then we saw from March all the way till May, you just went down. I mean, there were up days where it teased you, and then you went down, and you went back up in June, and then you just continued down. Now in July, you thought you hit a low because July to the middle of August was a super bull run. You went from about 381 all the way up to 426. That is a super bull run. And then you basically hit the October bottom. Now there's a talk that this October bottom, we could revisit it. If you're seeing a move up in this one, maybe we get to 415 or so. That would be my guess. I would get a little bit nervous if we get to 420. Then I'd take an edible. Ironic. But yeah, I'd be a little bit nervous if you get up to that area. The RSI for the daily on the SPY is 54. So it's kind of in no man's land. But yeah, the Qs, same kind of thing. Just a little bit more dramatic in the Qs, in that you use the 200-day on our 4-hour algorithm. You never really got down there. And you have a buy-in at 298 and you're trading at 301. So I've got a lot of cross-ups, and there are too many to go over in this episode. So I just want to kind of focus on a couple that I will, and I want to go over a couple of things. But before I do, I will recommend another podcast to you. It's called On the Tape, I think it's called. It is with Guy Adami and Dan Nathanson. And this, on Thursday, I think they released an episode. It was basically on Tesla and a lot of the other things. Understand, Dan Nathanson is a super Tesla hater. Super. He's been shorting it, and he made some money last year shorting it, and now he thinks he's good. He's also a guy who bought a Ford Mach-E. And if anybody wants to know a douche, it's a douche who buys a Ford Mach-E. If you buy a Ford Mach-E, yeah, whatever. Do not come at me and say that Tesla is not changing, because what he did was he bought it and then he sold it right away without saying anything bad about Ford. So he wants to shit on Tesla, but I think he's out of line. What I do think he's in line on is that if Tesla and listen to that podcast, it's a great one. But if you if you're bullish on Tesla, you should really listen to that podcast, because I think they're right on. If for some reason these price cuts cut into their revenue, cut into their margins, this could be a real hurt for Tesla. You're down at 195 today. Let me go to our core investments here. Tesla is down 1.14%. This algorithm got you out with a 62% gain here on March 3rd. We've talked about it. This gap down here between 146 and 154, that's kind of where I'm targeting for this one to go. They just reduced their prices for the Model S and X, which was known. But the margins are going to move down from 25 to 21%. If that's the case, Elon is going to have to increase the amount that he sells. So in order to increase revenue, simple business practice. But what they kind of indicated was, Well, Elon's losing money at Twitter, and it's pretty clear he's losing money at Twitter, and advertising is kind of quote unquote drying up compared to what it was. He's cutting his costs, but it's just not cutting it quick enough. He probably has enough money, but what Tesla could do is actually a secondary offering. That might kill the stock, and it might bring it down significantly. Because if that were the case and they need more capital, they're going to build a new factory in Mexico. They've got 2 cars that are not really well hidden. It's kind of well known what they're going to do. But again, you're kind of taking a risk here. I don't think 200 is out of the question on this one. But when you go to FinViz and you look at Tesla, their PE is 54 and their forward PE is 35. That's a pretty expensive PE to have in a rising rates environment if interest rates are to stay. Now, they have enough money to run. The question is, do they have enough demand to push this forward? So listen to that podcast. Again, it's on the tape with Guy Adami. I really liked it. The other thing that they had was Tom Lee. He was on there. He's calling for an 8-week rally. But he says the key point is, and again, this week is kind of key, Friday, there's the February jobs report that comes out. That's going to be key. If we see another strong jobs report, Jerome Powell may have to do a 0.5 point increase instead of a 25-point increase. And if he does that, then that's basically, one of the other things that I said on Twitter was Art Cashin came out on Friday and said, hey, the Fed can't do a 0.5 rate increase because if they do, that indicates that they were wrong in January, only doing a 0.25 point rate increase. So you've got kind of these dynamics. Powell testifying on Wednesday, job reports coming out. Tom Lee says, hey, we're heading into a 8-week rally. Take your pick. D-Man, he is big on his windows. JELD, Geldwen, he is big on this one. He's buying in big. The algorithm has a buy-in here on March 2nd at 13.13. And it looks positive. You're 1383. You have no catalyst. Their earnings are in. You are upwards of this ascending triangle, and you've got a positive moving 200-day. You're above the 50-day. He's a big believer in this one. Gotta say, I mean, with new buildings and kind of, people renovating their houses because they're not moving. People aren't moving because they have cheap mortgages now. He thinks that's a big one. So JELD, I think you're good in there at 13.13. Just make sure you have your stop losses tight because there are some pretty good gaps below. The gap above is at 15, about 16 to 1760. So I think you're probably pointing towards this one. Let's see what the fundamentals are on JELD since he's big on it. PE is 26. It is super expensive. Forward PE is 7. So they could grow into their earnings pretty well. 42% year to date. He's been pounding the table on this one. So, you guys are still on that one. Yeah, I was, damn it. I was looking at, you guys were looking at, but yeah, you'll have to look at the charts later. If you have TrendSpider, you can look at the charts, but I'll share them a little bit. If you guys want a chart, just request it from me. As to what I was talking about, but there's thousands of listeners on the freaking podcast. There's hundreds of people subscribe to the other platforms. So if you're listening and you want a chart, just request it. I'll put it up there. But yeah, JELD 1313. Let's go over some of James's. He's been pounding the table on Schwab. Wanted me to look at Schwab. SCHW. Is the symbol. You're out as of February 23rd. That got you out with a 2% gain. You're below the 200-day. You're trading at 76.96. I don't see the MACD really turning around. I think there's better financials out there, but Schwab is kind of one that I think is a mainstay. Let's look at some of the fundamentals. Schwab, their 52-week range is 59 to 93. You're right in the middle. I mean, you're 30% above your 52-week low. You're 17% below your 52-week high. Your forward PE is 14. Your PE is 22. You got a 1.29% dividend. Year to date, you're down 7.6%. January 19th, The price target from Bank of America is 75. January 4th, Goldman upgraded them, their price target to 98. I don't see anything horrible in here. February 28th, you've got, a couple $1 million sales. On February 14th, the co-chairman sold $2 million worth. These guys are selling around 80. So if your price target's around 80, I think that's where they're comfortable with it. I don't know that we're looking at 90s, but I think that's if I were looking at it, I would say 80 would be the comfortable place where they're looking at it to go, just since they're selling. WES is one that he wanted me to look at. Western Midstream Partners. This chart's an eye chart. Oh my God. I mean, it's just going up and down. It's just it has a buy-in today at 27.22. I think you've got a gap up here at 28, but you're clearly between 23 and 29. I think this is a small cap. Let's see. They've got, this is micro cap. This is a super, super small energy company. I don't think it's got, not my type of thing, but if you wanted to go into it, you could. HWC Hancock Whitney is one he asked me to look into. It's below its 200-day. You got a cross up here at 48.92. What do these guys do? I don't even know. That's the problem is half these companies, I just don't know. Financials, it's up 1%. Kind of PE is at 8. 2.45% dividend. 52-week is between 41 and 57. You're trading at 49, so you're kind of a little bit above 50% and you're halfway, but you do have a cross up here at 48.92. You just passed your ex-dividend date, so the dividend has been taken out. You might come up to your 52-day, your 200-day. Your 50-day is kind of just fluttering around the 200-day, so it looks like it wants to break it, but it kind of is using it as a resistance level. I don't know. If you like the stock, 48.92 is the buy-in. Pepsi. Pepsi could go to. I mean, this is on our core portfolio. I said anything under 170, I thought, would be a great buy in this one. I think 180 is probably your swing point on this one. The algorithm had you in at 171. You got out here with a cross down. It hasn't crossed up again. The ex-dividend date is just passed. This is one I just buy and hold. I mean, I drink soda, so I have Pepsi and Coke. Oxy is one he wanted me to look into. They had their earnings. They had an interview this morning with Brian Sullivan on CNBC, the CEO, and talking about her relationship with Warren Buffett. Warren Buffett is still in this one. You have a gap here that it looks like it's going to fill to 62.44. I said under 60, buy it. Over 60, you can sell it. Its ex-dividend date is March 9th. Doesn't have a huge dividend. This is just one, probably won't be the best performer. Again, it was the best performing, Dow stock or S&P stock from last year. I think it was the top performing S&P stock from last year. You're going to be between 58 and 75. I mean, honest to God, if you want to buy it at 61, I don't think you're going to get hurt. But Oxy is one. Kellogg's. James says Kellogg's has been absolutely beaten down. I kind of agree, but I wouldn't get in. Look at that one. It right after earnings, they just kind of couldn't hold it. The 200-day is moving downward. If we go and look at a daily on this one, you're just really looking at a beaten down stock that probably is going to put support. I mean, I would say it would put support in here at 60. If we pull back this volume support right here and we go back to, say, May, you're looking at, around 63 is where the real support is. And I think that 200-day, you're just coming back down to reality. Kellogg's is probably just one that kind of got away. Year to date, you're down 8.5%. Your dividend is 3.61. Your PE for a packaged goods company is 23. Do you think they're going to grow in an inflationary environment? No, people are going to go off-brand. So I wouldn't get into that one. William wants me to look at MOS. This is Mosaic. I think this is a fertilizer company, if I'm not mistaken. the algorithm loses you 6%. Buying and holding this one makes you 85%. So don't listen to the algorithm, but the algorithm did have you in here February 24th at 51. It's at 56. You're kind of seeing that button hook, like I always talk about, that button hook up here at 50. I think this is getting expensive. The RSI is at 90. That MACD is way up there. You've passed your dividend date. I'd probably be selling this one just because you're bumping up your 52-week high. Oh, come on, MOS. Why is this not going? I'm having technical difficulties with FinViz. FinViz is MOS. I'm going to hold on one second. I have to put it on hold. I don't know why FinViz is giving me so much problems. I'm signed in. MOS. There we go. There we go. We're going to move this back over here. Sorry. FinViz was giving me problems. Your PE is 5. Your forward PE is 9. That's dangerous. When your PE is lower than your forward PE, you're going to have to grow earnings. It's up 28% year to date. But I like the move. Tesla and PTON over Tesla. PBT. This is a Permian Basin, and it's well above its 200-day right here. You've got kind of, let's see, it's an ugly chart. 25.20 was the buy-in on the algorithm, but you've kind of lost it today. I would be worried about this gap down here at 16. It's an energy company, so I don't know. They're tiny. This is just a tiny one. I mean, it's got a 28 PE. It's expensive, super expensive. Year to date, you're down 2%. Over 1 year, you're up 84%. It's an energy company. The dividend is 5.44. I think it's okay. Let's see. This is Travis on Facebook. Nice call on Macy's. We can look at Macy's. I had a nice call on Macy's, I guess, around earnings. I said, hey, you should buy it. It got down here at 20. 20 was the time to get in. It's up at 22.48. So nice 10% move. IQ got moved to a higher price target. What is IQ? I don't even know what they are. They have a buy-in at $7.70. I think it's just run way too much. I think, but let's see, IQ. I probably should look at these things. You know what? I'm going to go over, if I don't recognize the thing, TME. Let's look at what is TME? 10 cent. You're going to crash when TME is 10 cent. And this is a TikTok. They're going to ban it. I wouldn't buy this one. My weekly stock pick, JP Morgan. Personally, I own JP Morgan at a much lower price point, about 120. I own it in a retirement account, just kind of hold it. I bought it, I think even before it dipped down below 100, I bought it at 120. This one's in an upward trajectory at 142. I don't know that I'd necessarily buy it at this price, 143. I'd probably stay away from it, but financials are probably good. If I were to buy one this week and I were to buy a financial, I'd probably look at Goldman Sachs. Goldman Sachs got beaten up, and they're at 358. I think they could easily get up to this 368 level if financials go. I also think Morgan Stanley is a good one to buy if you're looking at financials. This one had a cross up at 98.33. We'll go into that one, but Morgan Stanley's a good one to buy. JP Morgan, see, here's the thing with my weekly stock picks. He's got to pick from the 30 Dow stocks. And so JP Morgan is one that gives him momentum. He's got his own algorithm, gives him momentum, gives him everything that he needs to go. Oh, nat gas, they're on talking about nat gas tumbling, so KOLD. So he's got to pick from that. I would tend to say, hey, I think Goldman Sachs might be a better play this week. personally, but I don't know his algorithm. So I bring up his thing. JP Morgan is his. There's a bunch of companies that are reporting this week. Ulta is one. This is a beauty products company. They report on March 9th. So what? Wednesday. This one just got out of a 14% run from 456 up to 526. That is a huge run into earnings. I would say hold off on this one. It's a great company. I mean, honestly, this company for 1 year, you're up 40%. Year to date, you're up 12%. Their 52-week high is 537. So you're only 2% below your 52-week high. Going into earnings, I'd be a little bit careful of that one. Another earnings this week, Oracle, podcast favorite. We had a buy-in here at $88.70 or at $90.20. This one, they got the Uber contract. I think they've got a lot of positives going into their earnings, but you are, again, close to a 52-week high. Your PE is 27. Your forward PE is 16. Year to date, you're up 9. You're only 1.55% off your 52-week high of $91.22. You're trading at $90.21. So I'd be careful of that one as well. Campbell's Soup, CBC, Charlie, Peter, Brawl, Benjamin, CPB. This one, $51.80 was the price to buy at January 30th. You got all the way up here at 54. And now you're down at 52. So their earnings are coming up March 7th. The algorithm, the MACD has crossed down. The 9 and the 21 are kind of crossing. It might get you out right before earnings. This one on earnings last time, back in December, popped. You get a gap from 53 to 54. You're trading under the 200-day. So a moving average, in my mind, if you're looking at playing in earnings, this one might be an earnings to play. Another earnings that you might want to play is DocU. This is a stock that has been beaten down, just absolutely beaten down. There are gaps all the way up to fill. You are over your 200-day. I repeat, you are over your 200-day. That is a fairly big spot to be in, but you just had a cross up at 61.90. Their earnings are coming out on March 9th after the bell. I think you've got this gap up here at 161. I don't think you get up there, but I do think the gap at 87, if they put in some good earnings, I think that's in the cards. DocU, we can take a look at it. I don't think that they're making money yet. No, their forward P is 29, so they're fairly expensive. If they show some type of positivity, I think you could see it. Year to date, they're up 17%. Over 1 year, they're down 40%. Their 52-week high is 113. So they're 42% above that, 64% above their 52-week low. Here's the thing about DocU. I think they're staying around. I don't think they're going broke. These guys will be around for quite a while. Another one that should be around for quite a while that's reporting earnings that I personally own but don't have in our core portfolio is CrowdStrike. Cybersecurity is going to be around. This one had a buy-in here January 11th at $97. You're at $128 right now. You have all the confirmation in the world. You're about to get, if they have good earnings, you're about to get a good golden cross here. I would be careful of this one if you're buying in here. It's just had quite a run. You've got a gap up here to 136. That's where I think if you have good earnings, I think that's where you cap out at 136. So just be a little bit careful. If you wanted to play one after the bell today, I was going to take you through this one. TQQQ is one. This is trip.com. This is a travel. You had a buy-in here at $37.79. You're at $39.11. Their earnings are coming up again after the bell. Your RSI is close to 65. People are buying into this one right before earnings. It is expensive. It is not making money, and the forward PE is 36. Year to date, you're up 12%. For 1 year, you're up 43%. The cap on this one is that it's close to its 52-week high. Its 52-week high is $40. You're only 3% there. So you've got 3% up, but you've got 171% down to its 52-week low. January 30th, JP Morgan initiated coverage. You can read Trip.com Group Limited to report fourth quarter. That's a PR newswire that's just going to tell you the details of it. You can read analyst report from Morningstar on this one. There's no insider buys. There's nothing in here. Personally, I probably wouldn't buy this one. And that's my personal opinion. That's the way I look at it. That 52-week high is just hard for me to justify. There was a tweet by Jake Wujast, I think that's how you say it, from TrendSpider. IWM, textbook breakout off of volume shelf on Friday. If you were playing blackjack, this is like holding a 20 when the dealer is showing a 6. Can you lose? Absolutely. Is there a high probability you win? Absolutely. So IWN, let's take a look at this one in the algorithm. And then we'll go over all of our scans. Well, some of them. IWM, we had a cross up on Friday at 189.67. You're at 191.22. You're in a downward market because it is red for IWM. It opened at, opened at 191. And you're currently trading at, 191.56. You're at 191.26. So IWM's down. I would say probably the floor on this one is about 187. So if you're playing IWM, I'd probably, if it got down to 187, I'd take the loss and just kind of wait for it to maybe hit the 200-day. You're up above this 200-day. You had this golden cross right here at January 23rd. And the stock was trading at 186. I would say that's probably your floor, 186, 187. But Jake, like I said, just a genius at these charts. Really, really good. One that you want to watch this week is Meta. And Meta is up almost 2%. And the reason you want to watch Meta is because they do have this gap up here. If we go back and we look at this gap, it's all the way up to 320. That gap just starts at 245. I think you could get up there if the Senate passes their banning of TikTok. If they ban TikTok, that traffic's going to go to Meta. 100% Meta. The other one that you could absolutely play in this one is Snap. SNAP. And Snap is up 10% today. Let's see. Let me look at Active Trader Pro. Snap is up. This one, the earnings, it's up 11% today at 1180. It's just, this is just a move because any reaction to earnings is an overreaction. It kind of came down, and they came down to $9 and you're at 1183. Let's see what actually happened with Snap. But those are two that are social media. February 1st, UBS put a downgrade and a $10 price target. TikTok does better job than Snapchat. Snapchat kicks few children off. App in Britain. Blah, blah, blah. There's no real news on this one. You can see that there's some. Here is Chief General Technology sold $10 million at $10.90. It's probably a pretty good target for this one. 1187 for me, just too expensive. RSI is up at 72. I'd probably get into Meta. So if you want to play that hearing this week, get into Meta. We talked about Boyle and KOLD. Boyle is just absolutely crashing. I think Boyle is still your play. I still think it gets in there. One that if you wanted to play like I did last week with PXD, CHRD is one that is having their ex-dividend date. You have to own it by the end of the day today. So by the end of the day today, you have to own this stock in order to get, it's around $5. I think it's $4.80 per share. That is the dividend that will get paid out. This one was a buy at 137 on the algorithm on February 27th, right after their earnings. You're trading at 142. Just realize that I think it's about 3% dividend payment that comes out. That will come out of the stock. So you have to assume that the stock will go higher. You can sell it tomorrow morning at open. You can't sell it in pre-market. You can sell it at open. You can sell it at open. You just have to be a record holder at the close of the day. And at the beginning of the day, you'll get the dividend. So, it gets taken out. So if you want to own that one, you own that one there. Let's go over some of our cross-ups. Apple. Apple is up 2.64%. Upgrade from Goldman Sachs, $199 price target. Your boy has Apple. 151 is the price target. I say 140 is a decent buy on this one. I do think that you'll probably get a chance to buy it in the 140s at some point in time again this year. 130s, outstanding buy. If you can get a 13 handle on this one, you are just doing yourself a favor. A 120 handle, legendary status. I mean, you just get legend status if you buy this one at 120. 151, not a bad price to get in. Listen, their dividend, I get, thousands of dollars in dividends after each dividend. I just reinvest it. So your boy bought up here at 151. I'm holding at 151. I'm sure I'm holding a ton of shares at 151. So I'm not too worried about it. I think, this is one that I just buy and hold. The first sale that I ever did was this December in some tax loss harvesting. Other than that, I don't sell it. XLY, which is the consumer discretionary sector. XLY is in our core portfolio. I like this sector. 146.30. You're kind of going to use that. This is one that I just buy and hold. I don't get in, get out of this one. You did have a 12% gain in this from the the December lows here at 129 in January. You went all the way up to about 153. It got you out of around 148. So 146 is a buy-in. If you want to get in, you get in. Amazon is one in our core portfolio as well. A cross up. It's 0.87% up today. This is 194.22. I say $100. Anything under $100, I think you're doing well. I think there's gap up here between 108 and 110. I think at some point in time this year, you probably cross that. So if you want to buy Amazon, you get Amazon. Microsoft is another one that has a cross up. They put $10 billion into ChatGPT. Google wound up spending something like $200 million just in market cap when they had something go wrong with their AI. 255.05. In my mind, I think you wait for 2.4 handle on this one. I think you will get a 2.4 handle on this one. I think anything that you buy in a 2.3 handle, 2.30, I think you're doing really well. I don't know that I'd necessarily buy here at 258. I think you probably want to look at 245. Just be patient on these. You can get your entry in this one. MPLX, which is a huge dividend payer. Let me just make sure I have the right dividend on this one. They don't pay as much as maybe PXD or something, but they have an 8.88% dividend. This is one. Their dividends are already passed. Their earnings have passed. You're in an ascending triangle. 35.11 is the buy-in here. I don't know that I'd necessarily buy it here. I'd probably wait for a 34 handle, but it's at 35.15. It's okay. We talked about Morgan Stanley and JP Morgan and Goldman Sachs. Morgan Stanley has a cross up. 98.33. I think anything under 100 on this one, you're doing really well. Again, if you want to wait for this one to get back down to 70, maybe. But I think anything under 100 on Morgan Stanley is great. I personally own this one. Etsy, we talked about, I actually was shocked that I still own this one. But 121.42, you're bouncing right off the 200-day. Their earnings have passed. There's no real accelerant on this one. The MACD is super low. The RSI is down at 40, 121. What do you have to go up to, 130? I mean, that's not unheard of if you get to 130 in a good market. If Powell decides to drive this market down, 121 is going to look like an overpayment because you're going to get back down here to 120. Pfizer, I talked about. I took this out of our core portfolio, but I still personally own this one. Pfizer is a cross up at 41. We talked about how beaten down this one is. I think you could buy this and easily go back to 46. I think you'll cover this gap at 44 at the very least, but 41 in my mind, I think that's a great price for this stock. You take out all of the COVID stuff from this stock. It's not the COVID stuff that's killing it. It's just the reputation that's killing it. But that's why I took it out of the core portfolio. Bank of America, BAC. We had a cross up here at 34.15. I was waiting for it to get back down towards 30. But 34.15, I might put some money into this. You're trading at 34.49. It's below its 200-day. I'm pretty sure you get back to 36 at some point in time this year, 36 or 37. BAC, cross up. VOO, which is your S&P tracking fund. This is your Vanguard S&P tracking fund. This is, again, we had a SPY cross up, so you're going to have a VOO cross up. 370.38 is the cross up. I think you just, again, I think you wait for it to go under its 200-day at 360 because at some point it will. Just be patient. But this is one that you don't trade. You just buy and hold. Qualcomm, which is a podcast favorite for chips, bounced off its 200-day, 123.08. We're just getting out of a 19% gain on this one. I think that's a great one. NVIDIA. I think NVIDIA has had its run, but it looks like it might be going for a second run. You had this cross up here at 232, and you're still in this one. This is a secondary cross up. Their ex-dividend date is today, so you have to own it by the end of the day today, but their dividend's nothing. Let's look at what their dividend is. Their dividend is 0.07, so it's not a big deal at all. Come here. Come on. Come on. Okay. Here you go. Penny, you can bury yourself if you need to. Okay, let's see. Which stock were we on? NVIDIA. Sorry, I had a dog crying. I had to get over there quickly. Uber. We talked about Uber. It is in our core portfolio that I like. I don't personally own it. Personally, I want to own this under 30. It's going for a second run. This one, you had a buy-in here at December 28th, 24.75. Absolutely, I should have bought it there. You had a 34% run up until February. It dipped down. You've got this gap down here at 31. I don't know that I necessarily believe this. I think Powell might bring down the market, so I'm being patient. I'm not buying on this cross-up, but it did have a cross-up. Disney, anything under 100, just buy Disney. Disney's back over 100. It's at 102. It is up 1.25%. We had a cross-up here at $100.60. You're bouncing right off that 200-day. Again, this is a 4-hour chart. You're just getting out of this 23% run. Your boy bought it at about, I think, 112. I bought up here. I'm still holding. Just bought in a small portion. I'll buy in at this $100.60. I'll put it in at 100 again. mRNA, since I brought up Pfizer, I have to bring up mRNA. I'm not a big fan of this company. I think they're a hype. Their earnings have passed, so you really don't have any. The MACD is down low. It's at 144.04 is the cross up. I think they do probably have more downside to go. The only thing that will bring this one up is for some reason, a government like China decides, hey, we're going to buy the mRNA vaccine for COVID. I don't know. URO. No, that's, I forget. That one just, that's a triple levered ETF. Let me see. SPXL, which is the bull, 3 times S&P bull, $70.56. I'm going to go to levered ETFs. UPRO. That's the one that came up. UPRO. We had a cross up here. This is the this is the Ultra S&P 500, 3709. You're trading at 3817. So if you want to get this one, I think you could go close to 40. If it were in a good market, you could get close to 40. That's a nice little run there from 38. It had a cross up on Friday at 3709. UPRO. And we talked about SPXL, which is the 3 times S&P 500. This one had a cross up at $70.46. TQQQ on our algorithm. This is a 4-hour algorithm. I'd rather see you use the 65-minute algorithm to trade this. 23.23 on TQQQ. You're at 24. I think you could easily get to 26 on this one in a good run. But again, take your pick. DRN, which is the real estate bull 3 market, 3 times, I should say, 3 times, $10.85. You're at $11.01. I think you could easily go to 13 on this one, personally. In a good market, this is just based on the real estate market. There's a gap up here between 16 and 1650. I think you could go in there. TARK, which is a 2 times ARKK Innovation Fund ETF. And you do not want to hold these for an extended period of time. So make sure your stop losses are short. Make sure you have less than a 5% short loss. I would get out if it's losing 5%, just personally. Take your losses, take your lumps, move back in. $66. It's trading at $67.28. TARK. Then you have a bunch of these, and I'm not going to look at the charts, but these are Vanguard indexes. VNQ, VUG, VTI, VTV, VIG, VYM, VOO. I'll put them all down below. Then you have a bunch of spider sectors. XLRE, which is real estate. XLV, XLF, XLK, XLY, XLU. All of those have cross-ups. If you have TrendSpider, just pull them up, and you have my algorithm. Pull up any of those. Go to the show notes. I'll have them in there. If you don't have TrendSpider, ask me to look at them, and I'll take a look at them. HD, Home Depot, $296.96. It's trading at $299. Anything under $300, I think you're good on this one. There is a gap that goes to $288. I don't consider this one a trading one. I consider if you get into this, this is just a buy and hold stock. So HD, ARKW. This one is their web innovation. And I like this one. It holds GBTC. I don't think ARKK holds GBTC. I think this one does. 5148 is the cross up. And you're just getting out of a 30% gain on this one. Did have you in for a slight loss in this one. 5148, again, if we're going up, I don't think that's a bad price for this one. I think I sold my ARCs somewhere in the 70s, 60s or 70s. I did sell in the 30s in December to take some tax loss harvesting. So I'm able to get back in. I will probably get back in on these. ARKK. This is one that has a cross up to $40.35. You're trading at $40.66. So this is one that you could get into. We talked about TARK, which is a levered one. I'd rather see you in this one for a long term. The TRK is a short term one. We talk about JEPI a lot. There have been some questions about JEPI, JEPI. This one has a buy-in at 54.04. This one, my algorithm makes you 3% versus losing 4% on the algorithm. On the buy and hold over 2 years. Now, if we go to a deep test of 7,000 candles of this one, my algorithm makes you 9% versus 7% on the actual asset. So I think the algorithm works on this one. I think you put in a buy at 54.04. I think if you hit it, great. 54.29, not horrible. I think it's going to hover around this 200-day. JEPI is one that pays a significant dividend. It's a premium income, 11.8% dividend. It pays it monthly, from what I remember. Yeah. So you're seeing huge inflows to this one. This one could, because it is outpacing at 11%. You're outpacing bonds. You're basically making 11%. The real question is, can you keep the asset price consistent? Because if you look at a long term of JEPI, it is a decaying asset. It pays out its money in dividends. And the only time it really went up was from October 2020 to 2021. Since then, you've been in a downward spiral, and that 200-day is just moving down. At 11%, doesn't make sense to hold this one because you're losing 11% as much as you're being paid 11% in dividends that you have to basically pay out on. Then you're going to take it off on taxes, blah, blah, blah. But JEPI had a cross up. The rest of them, I'm just going to list. DEER, DE, PFF, which was the ETF that I talked about that has like a 6% dividend or something that I've held for years. I don't hold it right now, but it had a cross up here at 32.48, got you out. 32.65 was where it was, got you out, and then got you right back in. But PFF, J&J, 150 something. Get in, just buy it and hold it. IBM, AXP, American Express, Southern Corporation, SO, Starbus, SBUX, which is for the China opening, Nextera Energy, NEE, GD, General Dynamics, GM, Duke Energy, DUK, and Oracle. Those are all of the list. Yeah, if you have any charts you want me to go over, let me know. I know I was boring probably at the beginning of this one, but I gave you enough to kind of look over. If you have any questions, hit me up in the socials. Let me know your thoughts. If I went over a chart and you didn't see it on YouTube, just let me know and I'll pull it out. But I will talk to you tomorrow. Again, just be careful. It looks like a good day. The market is in the green. The S&P is up 0.63. The NASDAQ is up almost 1%. Dow is up almost 0.4. I would be careful. Again, Jerome Powell on Wednesday, jobs number on Friday. You've got quite a bit of volatility in the market. Boyle, by chance, Snap is still up 11%. And that's just on the hearings. But Boyle is down 20%, 20.89% at $6.21. It's definitely gotten up there. Yeah. You're looking at, let me see, a bit of massive 621. Poof, it's ugly. But if you have any questions, hit me up. Thanks, guys. See ya. Do export song to disk. Thanks, Joe. I didn't switch it back. Oh, Sania left? Sania. You did hit. It was 100%. I saw that. But I don't know what she's giving her. Is that the upward target or is that just, hey, it'll hit? Sania confuses me sometimes. And I think that's because she gives targets of stuff that are to the set. That's more options trading stuff, I think. I don't trade options. But, by the way, if you're still here, hit the thumbs up button. I don't know how many people hit the thumbs up button. I can't see it. But hit that thumbs up button. You guys were quiet, man. Let me see. Why is it doing this? We're going to get out of that live chat. Boom, 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 boom. Boyle is ugly. I think my Active Trader Pro is doing something funky. GOOG. So, here, I'll show you, Sherry. Let's go back to Safari View. Here is GOOG versus GOOGL. I have this up from Friday. So from a 3-year perspective, you're looking at pretty much the same, 37.6, 37.5. 1 year, you're looking at 28%, minus 28% versus minus 24%. So the GOOGL holds up over 1 year. Year to date, GOOGL is performing actually a little bit better. 6 months, you're losing 10.8 versus 10.6. The reason why I always say GOOG over GOOGL is the 5-year. So if you're looking to hold it for long term, GOOG 72%, GOOGL 71%. They buy back GOOG. They don't buy back GOOGL. GOOGL gives you voting rights. But with Larry and Sergey owning so much stock, you're never going to get to vote. Your vote doesn't matter. So I moved the chat screen. Did I? I don't think I hit anything. Huh. But yeah, Sherry, I would do GOOG. Personally, I own GOOG. Just because I don't care about the voting rights. But it's that 5 year that made me do it. But again, when you look at short term, I mean, you're looking at 5 days, 5.45. It doesn't, Google GOOG loses you 7% versus GOOGL loses you 6.5%. That's over 1 month. When you look at 6 month, it's a 0.3% difference. Year to date, GOOGL is performing a little bit better at 7%. 1 year, it's about a 4% difference, ironically, which is a lot over 1 year. But I just have a feeling. I used to split it up 50-50. But I stopped doing that when I found out that the one that they buy back is GOOG. Snap is jumping just based on TikTok. Which, by the way, makes me think that Meta is an even better play. Wow, what's up 3%? 4%. TQQQ is up 4%. These are levered ETFs. Let's go to the core investments. Wow. Core investments is doing well. Did Tesla turn positive? No, still down a little bit. NVOS. Is that one of these momentum ones? Oh, this is the one. This is the no, this isn't it. I thought this was the falling knife. I mean, if you're talking short term, Brandon, I'll go over Active Trader Pro. But long term, do not hold this one. There's no reason. That's a falling knife right there. I would not trust that one at all. We can go over Active Trader Pro. By the way, Snap still has confirmation, just in case you're wondering. And I think Boyle will start coming back. I think he'll start coming back before the end of the day. NVOS from 12 cents to 14 cents today. It's up 14%. James has a screener for FinViz if you want to use FinViz as a screener for some of these momentum plays. UNH is up a little bit at 480. That one I have buys in at 485. So I like it at 485. I still do. But if I'm playing one today, I'm probably playing. I mean, GNS seems like it's got some gusto to 6. I mean, this has picked up steam again. Look at the volume levels at open are even above where they were Friday. New episode. Create an episode. Do 3.6 upload. We're gonna put in swapping tubes again. Where's my swapping tubes? There it is. Put that up, insert ad. And boy, I got a lot of you missed all my great charting on SPY and everything of that sort. Whew. Jeppy, man, I hope. I forget who it was. Somebody in the private Facebook group was debating me about Jeppy's the greatest investment because it pays 11% dividend. Enphase Energy up another 5%. We went over that one. That's a good one. I may add to my Google. Although, Sherry, the one thing I'll tell you about adding to Google now, I'm probably going to be fairly conservative this week with Powell testifying, because Elizabeth Warren's going to go after him. That a large portion of the Republicans will go after him for some of the social media stuff with the Twitter files and stuff. They'll go after him for that. So you're going to see some hits on big tech in that one. And then on Friday, you got the jobs number, man. If that jobs number comes out as, oh my God, the jobs market is heating up, and there's 2 jobs for every 1 person that's looking, good God, that's going to get ugly. Okay, let's see if I can. Chick-fil-A is outside my house. They're delivering something. Notes. And I didn't even go over bond rates. Powell. There's the puppies. There's 2 puppies outside. Boyle crashes. I do go over Oxy. I don't go over Snow. I do go over Macy's, BAC, Uber, and all of those below. Yes. Which was the one, the triple levered ETF? UPRO, there we go. Okay, UPRO is in there. We will copy and then okay. You won't be hurting, Sherry. If this is your grocery money, you could be hurt in the short term, but here, let's go back. I'll show you Safari View. Joji. Boom, boom, boom. At 90.67 was the buy-in. So if you just bought at 95, say at 95, 96, you're just getting back above the 200-day. I think that 50-day, at worst, that 50-day is going to bounce off this. You might be down a little bit. You might come down to 92, but you'll be fine. It's still under the MACD is still under the oscillator, the 0 line right here. You got their earnings coming up April. There's no real catalyst other than there's 2 catalysts for Google. Artificial intelligence becomes a bigger topic because there was a great discussion, and this is about artificial intelligence, and this is what I heard. So think of the gold rush. And in the gold rush, it wasn't, maybe 1 out of every 500 people discovered gold that was actually sifting for the gold. But you know who made the money in the gold rush? The people selling the shovels, the picks, and the sifting equipment. They were the ones who really got sustainably rich during the gold rush. Sure, you could win the lottery and find your gold, but the people who actually won were those. And so who holds the picks and the shovels here for the AI revolution? Is it AI, CP3 AI? Is it Chat GPT? Is it somebody else, one of those people who are actually building the AI? No. It is the people behind the scenes who create the equipment and the knowledge that comes from that AP, all of the artificial intelligence, the AI stuff. It is NVIDIA, AMD, all of the chip makers that are doing AI in their chips, that are creating that advanced silica. It is IBM, who has some server-based stuff, some cloud stuff that does some of the AI. It is Google that is training the AI. It is Meta, who actually winds up having a lot of the social interactivity with the database that they have of everybody's interests. It's them. It is Microsoft, who basically, think about it this way, and I've talked about this. My envision of AI is that I am a sales guy, and I am selling, widgets to company A. And my widgets have a certain advantage over other widgets. And I need to customize it for this company company A that I'm selling to. I'm going to go into Microsoft PowerPoint and I'm going to say, hey, give me everything that you know about company A and their previous purchase of widgets. Chat GPT and the AI is going to go into the historical database and understand every news article that has ever mentioned them buying widgets. That is 100% what they're going to do. And on the plane, I'm going to create a 10-page deck as to why they should buy my widget over the other person's widget. And all of that information is going to be customizable to the point where you click a button, it's going to create the 10 slides for you, and all you got to do is proofread. And so that's what you're going to do. You will see over the next 10 years, there is a new field that comes exactly out that will be a AI prompter. That's an AI engineer. You don't need a freaking college degree for this. There was a discussion I saw about, do you need a college degree for anything? You don't need a college degree to be an AI prompter. Now, to write the code behind it, you may need a degree. But the reality is AI is going to be so smart, we're not going to need coders. It's going to be doing the work of coders. The coding work is going to be the testers that actually test this with the prompter. So the prompter guy is going to be the most sought after position probably in the next 10 years. Because what the coding is going to do, and we've talked about this for 30 years now. 30 years ago, I remember how technology was going to decimate the workforce because automation was going to create all of these empty jobs that everybody would be sitting around doing nothing based on automation. That, in my mind, is going to be the next 20 years. Is the Chat GPT and all of that coding work is going to be left up to artificial intelligence. Because it's not like you don't need somebody to do the coding who understands the coding, but for every 10 coders that I hire today, in the future, I will hire one coder who will actually just basically tell the AI, I need this code. And overnight, it will write the code for that one coder who wakes up in the morning and just tests the code. That's it. D-Man, I went over JWeld for you. Let's see. And I need to do SPY, QQQ. put in. I'm not going to include those two. And James, personally, I actually, Schwab, I don't think it's a bad company. A lot of my high net worth friends are in Schwab. I like Fidelity. That's where I probably would, that's where I probably would put my money as Fidelity rather than in Schwab. Just because Schwab has been the... I need to bring up these ETFs too. QQQM, which is a new one that has a lower expense rate than QQQ. And I think people will be piling into it for that reason. JP Morgan. And we'll take this. And we'll cut this. I'm going to move you guys over here. Tweet. And we're going to tweet this one. Yeah, I think 16 is a good target on that one. I think I went over it and I said 16 was a good target on that one. It does look good. Looked better a few weeks ago. But it does look good. Cord. And then we're just going to pull these. Tweet. I was trying to get out of here before 11, but I am going to get out of here just at 11, it looks like. Oh, come on. Really? I don't have enough to get down here? Tweet. And we'll tweet this one too. You fall in love with stocks, man. That's the death of you. Is you find good ones, but then you fall in love. Okay. And that is everything. Boy, I liked. Yeah, this is good. Here, I'll go back here. So Sam is doing a training for an NFL Combine. Goal is getting ever age score. He'll spend 8 weeks training, and here's his day 0 baseline. So 30-inch vert. I thought it'd be a 28 college best. That's a really good vertical, by the way. 40. He's gonna train. This is great, man. I should do something like this. My problem is I don't go to a gym. Yeah. J-Weld was a good one. What's the symbol again? GELD. There it is. GELD. GELD. You got that ascending triangle that it's broken out above. So I think you're still good. I mean, you're coming out of a 28% gain. Here's your algorithm. Now, if you're trading on a 65-minute, on a day trading kind of thing, see, it's ugly, but there's too many candles, too many ends. 1311, March 2nd, you're still in. Personally, I'd probably look at this one and say, I'm going to take a mix between the 4-hour and the 65-minute. But I think, I saw this gap. There was a gap up here. This one. The gap between 1765 and 1602. I think when you hit that, if you hit that 1602 in this run, I'd say get the F out. Ma'am. Yeah, it's a biopharma. That thing's gone crazy. $1.86 on February 16th. Is it up today? Let me see. It's up 29% today. Still has confirmation. From a momentum standpoint, get it. But, okay. I am out. I will be back tomorrow. I thank you guys. I wish Serena was still here. But she said, Sania, she said goodbye. I think I offended her. She gave me her price targets on Friday, but she didn't give me her price targets today. Yeah. Let's see, MPW. Is this Manpower? Medical Properties. This is a REIT. I mean, it got you. It has a buy-in at 10:53. Your ex-dividend date is on the 15th. I'm just not a fan of this particular REIT. It's got a huge payout of 11%, but you've been losing. I mean, there hasn't been, even if we go, let's do this. We'll go to a weekly. Why would you like this stock? I mean, again, it was going up right before COVID when there was 0% interest rates back here. I mean, you had just cheap money. Now you're raising rates. And what do these guys do? These guys borrow to basically buy real estate. And so in a rising rates environment, you're basically going to lose. So I'd be super worried about MPW. I don't think they have a sustainable model. Their PE is 7. Their forward PE is 9.62. These guys aren't going to get money into the Motley Fool says buy it. Let's see what Motley Fool says why. Because I do have a Motley Fool subscription, so if they put me behind a firewall, I can always read it. AbbVie, real estate trust that owns 440 hospitals and acute care facilities. Dividend investors flock towards REITs, but inflation-conscious investors appreciate medical properties because it builds inflation-based rent adjustments and annual escalators. Of course, yeah. The important thing for investors to remember is that people still need hospitals whether prospect can make ends meet or not. By the way, ends meet is not MEET. Wait, is it? Ends meet or not? Oh, ends meet is correct. I am sorry. I was wrong. I thought ends meet was MEAT. Boy, your boy's dumb. Your boy is dumb. Dumb, dumb, dumb. Yeah, I don't believe in this one. I don't, and I hate. I mean, that to me says rising rates, higher longer. It ain't gonna work. Now, mind you, they're making some money, but they're paying more interest. So, if you want to play it, you can. I'm in a 65 minute. Let's look at a 65 minute. You're still in it at 1051. You're at 1057, 65 minute. $10.50 looks like the buy. So at $9.99, you got in well. Yeah. It's not a horrible one, but take it or leave it. Okay, guys, I'm out. You guys have a great day. Enjoy yourselves. I hope you make a ton of money on KOLD